Hi, good morning. Hope all's well. Just feel free to grab your coffee as today is a really informative webinar that Ray and our team will be presenting, and we'll be more than happy to share it and how we could grow your business at the same time. So we'll start it in a few seconds. In addition, there is going to be a poll that will be appearing on your screen. So by all means, feel free to answer them so like that we'll be able to cater to you as additional future webinars to enhance your business growth as well. In addition, some housekeeping items. The webinar will be recorded on our YouTube page afterwards, so you could use it as a reference point. In addition, if you have any questions, don't be shy. Feel free to type them up in the Q&A option. And throughout the webinar and at the end of the webinar, we'll also be answering those questions as well. And we'll be more than happy to assist you with any way we can. So allow me to first introduce you to Matt Pigat from the Miami-Dade Chamber of Commerce. And he'll be presenting and going over some of the offerings that the Miami-Dade Chamber of Commerce has to offer.
Good morning, everyone. Thank you, Jesus. I want to welcome everyone to our SBDC partnership with Miami-Dade Chamber of Commerce to present this financial webinar series. We know the first one we did literally was focusing on trying to understand financial statements. Now we're going into budgeting, forecasting, and projections, and our last one will be about managing cash flow. These are all essential skill sets that we need as business owners. It's not the prettiest things that we do or the most interesting as business owners too many times, but it's something that we have to master and understand if we're going to be leading our businesses and growing and thriving our businesses. And it's important for us to understand this. If we don't do it ourselves, but we have the language and the knowledge to be able to question our accountants, question the people that are doing those things. So we're happy to partner with the SBDC. I know Ray is going to give an amazing presentation with his many years of experience doing this work. And I just want to thank you and look forward for your participation. Please ask a lot of questions during this time. And Jesus says this will be recorded, so you can come back. But now is your time to be able to engage, ask questions so that you can learn what you need to learn. After the presentation, we'll talk more about Miami-Dade Chamber of Commerce, some upcoming events that we have to get you more engaged, and also our one-on-one free technical assistance that we have that is sponsored by Miami-Dade County and also Career Source South Florida. So there are a lot of entities that's coming together to bring this service to you. We're all here, we're all committed, we're all partnering to give you the best that we can so that you can succeed and we all can succeed here in this country. So thank you very much for participating. Spread the word so that more people, the more you engage, the more we get to engage you and get more support to help you become better. So thank you very much for being a part of this, and we look forward to you learning and hearing your questions. Thank you.
Thank you, Matt. And absolutely agree. You know, it's the collaborative and ecosystem to grow, create that economic impact through our hometown, our backyard. So a brief description of the Florida SBDC at FIU. We are your local SBDC center to assist your small business needs. We have 27 specialized business consultants at your disposal, all the way from Miami-Dade, all the way down to Key West. If your business is located outside the region of the counties of Miami-Dade, Monroe County, don't hesitate. I will be more than happy to connect you with your local SBDC at your particular region. Some of the services that we provide is access to capital, marketing, government contracting, business planning, operations, and strategic growth. Just to name a few items that we're able to assist you with. And once again, it is confidential and no cost to you. So it's a great opportunity how we could collaborate together and grow your business at the same token. So without further ado, allow me to present to you Ray Juncosa, that he'll be today's presenter for today's webinar on cash budgeting and projections. So Ray, the floor is yours.
Thank you very much. Well, good morning to everyone and welcome. Looking forward to this presentation. This is very much a part of one of my passions, which is teaching and helping small business entrepreneurs. I taught at the college level since '85 and actually taught to a lot of bankers, and now I enjoy being able to assist a lot of small businesses with some of the critical issues that are always so very challenging to businesses. And I think you all know what I'm talking about, right? One is in the area of financial planning and finances in general. I mean, a lot of small businesses, unfortunately, don't focus enough time in this area, even though there's a lot of resources at your disposal. As Sue's mentioned, SBDC, we do quite a bit of financial training and these different projects together with the chamber, and that this is an opportunity for you to be able to absorb this information, because I mean, if running a business, if you don't have a grasp of your finances, it's going to be difficult to really succeed. I mean, I know a lot of you enjoy selling, and but as you very well know, if the numbers aren't there, and particularly if you're planning to grow the business, you need to have an understanding of these numbers and to be able to project correctly, which is really the topic that we're going to be talking about today, and prepare for that so very important meeting with banks where you're going to solicit funding. It is very important to be able to prepare yourself for that in order to move on and help to fuel the growth in the business. So, understanding the numbers is something that I always drum constantly with a lot of my SBDC clients, and having a clear understanding of these numbers is of great value. And again, you don't have to be a mathematician, or do you have to have a degree in business. But I mean, there's a lot of information at your disposal that we can provide to help you in this area. So understanding the financial assumptions, and as you see, assets and liabilities are what you own and what you own a business. It's important to have an understanding of the importance of financial assumptions. So I thought, maybe providing you a slide with some lists of important items that kind of denote that importance of assumption would be of great value. And again, it's all about, as you see, assumptions are the basic map for creating any model. Remember, when you start out a business, you're often asked to provide a business plan. And that business plan encompasses a lot of different components, but you will always have the component of making financial projections, particularly if you are a startup business where you really don't have a history yet. And so those projections that you're making, they have to be credible. So, I mean, these assumptions, you want to decrease the uncertainty, and to be able to decrease uncertainty, you need to provide credible numbers. And those credible numbers can only come from either an existing track record or simply based on a lot of research that can be verified. And trust me, as an ex-banker over 3 decades, I can tell you projections when it comes to a startup business, the business plan projections are critical in order for us as lenders to really consider if the transaction merits provisioning of funding, right? So, assumptions, as mentioned, are the key to achieving the buy-in from investors. So any kind of project that you propose, obviously being able to provide these credible numbers is of paramount importance, right? And so they definitely have to be very well thought out, researched, and tested. So again, again, the financial planning, as you can see, it's a component of the overall big picture, which is your business plan, which encompasses, the mission statement, operations, background, the description of your product and your marketing plan, your strength, weaknesses, opportunities, and threats analysis, again, in your competitor analysis. And then financial planning. That financial planning, the projection of those numbers are very critical. And this is why today we want to go over this area and make some important key points and takeaways that you can analyze and take with you. So again, it's about the key revenue drivers, right? Your sales, your expenses, the cash that you need to fuel the growth in your business, and obviously the profit, the end result in the business, right? So the financial planning process, very important to be able to analyze by gathering, the relevant information, analyzing the data, and making sure that when you put these numbers together, that you feel confident that they will meet the test. So the key premise of financial budgeting and projection is, you must, again, as I mentioned, it must be based on reliable statistics, the numbers. These numbers have to be believable. When you do your research, you always need to have a form of benchmarking. And let me tell you, as an ex-banker, I can tell you, we bankers, we love benchmarking. And so do the regulators. The regulators that regulate banks, they're always looking for benchmarks. And then obviously, if it is an established business, historical past performance is always an area that you fall back on. So when you make your projections, you're obviously going to be basing it on your past history. That's why when you apply for a loan with a bank, as you very well know, if you are an existing business, they'll ask you for your last 3 years tax returns. They'll ask you for a current balance sheet and income statement to see where you're at, what kind of progress you have made, what has been the trend. Because with us bankers, it's all about this trend analysis, and that trend analysis goes hand in hand again with your projections, the projections that you make. Whether we're talking about a budget, which is more of a short-term projecting, as opposed to projections that are more long-term. It's still, these are numbers that we're constantly looking at, and in the trend analysis, we were able to discover, as bankers, we're able to discover these some of these changes. Some of them are very obvious, and some of them are subtle. But sometimes these subtle changes, tend to create some red flags. So, we talk about differences between cash budget and versus projections. It's somewhat difficult sometimes, because at the end of the day, they're very much intertwined, right? But I think it's important to mention. Okay. All right, so let me see. Let me get back to the previous. Yeah. All right. So, although you have financial forecasting and budgeting are often used together, there are some differences, right? Budgeting quantifies the expectation of revenues that a business wants to achieve for a future period, whereas financial forecasting estimates the number of revenues that will be achieved. I mean, they may sound a little bit confusing, but I mean, when you budget, typically you're doing this at a let's say a year, right? When you start forecasting, and making projections beyond the year, as the years progress, it becomes more of a guesstimate rather than an actual number, right? You're hoping to be there, but as time progresses, there are a lot of things that can happen, and some of these things can very well be external components that will may hit you unexpectedly. So, and obviously we as bankers, we discount, we realize that, so we take that into consideration when we look at the numbers. But if I look at at projections on a business, and it's very well researched. And if it's an existing business, it's a lot easier to determine if these projections are actually believable or credible. And when it's a start of business, we can only fall back onto the industry segment and the research that you have conducted, how deep it was, and the resources that you used in doing it. So, you know, the chicken or the egg controversy, obviously that's always an issue, you know, which comes first. But I thought it, you know, make some, you know, brief definitions. Is a budget is how you hope the business will operate, right, based on what you've done in the past. And a forecast is what you think will happen. I think this is where it becomes, again, clear the kind of differences, you know, that, you know, as time passes, it becomes this forecasting becomes more of a prediction, right? Now, budgeting and forecasting, they are, you know, similar mechanisms, as we know. But, you know, the budget process comes first. You make your budget for the year, and then you forecast later, right? So I thought maybe showing you a comparative table to kind of denote the differences between budget and forecast. I thought maybe this would be helpful. You know, I have the basis, budget and forecast, and then we have events. It relates to planned events. It is concerned with probable events. Now, period, planned separately for each accounting, the budget period. Now, a forecast is more a longer period, as you can see. The coverage comprises the whole business unit. Now, sometimes a forecast, it just covers a limited function of the business, right? And control, it's a tool of control. And in forecasting, it really does not connote any sense of control, because what you're doing is you're projecting towards the future, which is uncertainty, and you're trying to muster up enough credible research to be able to make sure that these projections are believable. And okay, so a cash budget is something that perhaps a lot of you are much more familiar with. It's really an estimation of the cash inflows and outflow of a business over a specific period of time. I mean, one of the key financial statements that you should all become familiar with, you have your balance sheet, your income statement, and you have your cash flow statement. And in that cash flow statement, what you are reflecting is the inflows and the outflows of the business based on cash, you know, the cash inflows and outflows. That's why when you do a budget, obviously you're looking at what are you going to be investing this year in terms of inventory? You know, how will you purchase that inventory? How will you acquire it? Will you use your existing liquidity from the business? Will you be financing it through either trade term or actually with a financial institution? Will you be acquiring a fixed asset? How will you be doing it? Will you be selling an existing asset as a way of generating some liquidity and organizing? Are you going to be refinancing? And all these items will come up in your cash flow statement. And your cash budget is all about, you know, making a determination whether you have sufficient cash to operate the business, right? So financial forecasting, on the other hand, it forms an opinion, right, beforehand, because, and then again, as I mentioned, we're making a prediction, right? So it means it's a systematic projection of the expected action of finance through financial statements. So you're making let's just call it an educated guess, right? When you go beyond the year into the 2, 3, forecasting of 3 and 5 years, obviously, you know, as the years progress, it becomes more and more difficult, right? to be more and more credible. But again, everyone that you will be approaching, both investors as well as financiers, lenders, etc. Obviously, they're going to take that into account, but they're going to make sure that these numbers are as closely credible as possible. So now why? So the question here is then, why do we budget and forecasting? I mean, obviously, because we're going concern, right? We're thinking about the future of the business. And when we talk about a business being a going concern, is that you're assuming that the business will continue to live on, even beyond your years. That's why a lot of businesses have their exit strategy, and you have shareholders in the business, that will own the business. So I mean, even though, let's say, the owner unfortunately passes, there will be someone to pick up the baton and move ahead. And so the future is always challenging and uncertain, but it's also hopeful, right? That sometime in the future you will take your business to new heights. So, today it's all about understanding really what's the value of forecasting. Valuable. Why is it valuable? It's valuable to business so they can make informed business decisions. Now, why is that important? Obviously, again, if you're out there as a business and if you're going to make informed guesses, they should be based on obviously credible information, and those entities that you're approaching to secure funding for your business, they're going to really look closely at your projections to ascertain if they are credible or not. So I think it's important to understand, the role of forecasting then, and the importance of forecasting. If you are forecasting correct, it doesn't mean that this is the only reason for your success, but obviously it's very much a part of your success or shortcomings that you may be faced with. Accurate forecasting, again, credible, based on credible numbers. And the whole exercise in itself, to be organized. I mean, this is a great challenge that a lot of small businesses have in being able to grasp an understanding of their numbers, to take the time that they need. If they don't do that, it's just like the business that is constantly delayed on filing its taxes, doesn't have a clear understanding of what's happening financially to the business. Or let's say you present yourself at a bank, at a financial institution, and you really don't know how much money you need. I mean, there's nothing worse than approaching a banker, and when the banker is asking you, well, how much do you need? You say, well, how much will you give me? And that's not a good thing to do. Remember, bankers are in the business to lend money and get paid. It's all about risk mitigation. They are ultimately, and remember, banking is by far the most regulated industry in the world. And as a result, they have to mind their P's and Q's, and they have to make sure they cross their T's and dot their I's in the eyes of regulators. And that in itself makes them very scrutinizing in terms of kind of at times suspicious about what you're proposing, and then they'll look at it with a keen eye, and they'll look through it and make a decision through a lot of analysis in the underwriting process. I mean, any of you that have been through the experience of requesting an SBA loan, for example, you know, I'm sure you may remember how much documentation it entails, and forecasting and projections are very much a very important component of this process. Because remember, when you're forecasting and you're projecting into the future, and you're soliciting from a lender a loan that is going to be on the books for 5 to 10 years, you know that they're going to really look at these numbers very closely to analyze whether or not, for example, there's a lot of analysis that's being done in the underwriting process. You know, if you don't have the appropriate debt service coverage ratio, which is their way of determining if your cash flow will be sufficient. I mean, this is all a quantitative exercise. It's purely numbers to be able to say, okay, you know, this company will have the sufficient debt service coverage to be able to assume this debt. This is like, for those of you, when you went and you bought a house, you know, the mortgage broker told you, hey, you know, you need to take a look at your debt to income level. And in a business, you know, it's very similar. It's called the debt service coverage ratio, where you take the net operating income and divide it by the total principal and interest obligations that you're taking on. The bank wants to make sure that, you know, you'll be able to generate sufficient cash flow to pay the loan. So this accurate forecasting is priceless for them. And the more effective this forecasting is, the more positive the impact is going to be also on the business and your efforts to grow the business. So I know, and I understand, like I said, look, I always like to have a little comic relief in my slides. And as you can see, you know, I call it believable estimation. And as you can see, this guy says, I know nothing about the subject, but I'm happy to give you my expert opinion. At the end of the day, you know, this is a part of this process that is a prediction. It's a guessing game. Now, so budgeting is, again, in retrospect, is an outline of expectations for what a company wants to achieve for a particular period, usually 1 year. Because remember, when we talked about, you know, forecasting, it becomes beyond that year, right? And then you want to talk about what you expecting cash flows, what strategic decisions you're going to make to reduce your debt. And then you always want to compare, you know, the actual results and to be able to calculate the variances between the two. Again, when, as a banker, I look at, let's say, an existing business that has a track record, I will look back at the last 3 years, and then I will analyze through a trend analysis, basically, you know, what's happening. Because sometimes the story is not just in the difference between the sales of 1 year to the other. It's much more than that. You got to look at each line item, and that those variances and those line items tell a story. And sometimes it's a good story, and sometimes it's not such a good story. And you know, sometimes it's a red flag for you know, it's a red flag for bankers. So they want to be very, very careful with that. So again, forecasting is what? It's an informed guess. You know, it's the best said. But you know, it is both this budgeting and forecasting is very much a very important part of the overall planning process of a company. And remember, we mentioned earlier when we talked about, you know, the business plan. We talked about how even if you were a startup, the importance of being able to make projections that are credible, that are based on solid research that can be verifiable. But I mean, it's like flying by the seat of your pants if you don't go through the strategic process of sitting aside and doing your budget projections and your forecasting. I remember as a banker of 30 plus years, I remember that every year, in the month of September, which marked the end of the third quarter, a lot of the banks would be working on their budgeting, on their budget forecasting, and some of these forecasting was most of the time was for the following year plus 3 years. Sometimes it would be part of the 5-year plan of the bank, and it would entail some serious analysis and research. All I'm saying is that in your business, you need to have some time set aside to be able to do some strategic thinking. Strategic thinking where you can analyze where you're heading in your business, and it's going to be very helpful for you when you take the time for this budget and forecasting, because some things that you may have overlooked, all of a sudden you're saying to yourself, well, wait a minute, I understand. Wait, I think I overlooked something here, or perhaps I will need to make some changes. I mean, this is obviously priceless, because if you hadn't done the exercise, who knows, it may have created a real serious problem to your business. And in some cases, sometimes if the businesses are very small, a wrong turn can mean the end. So you need to have be prudent about the process of budgeting and forecasting. You can't discount the importance of this exercise. Yes, we do a lot at the center. We do a lot of training in the area of financial literacy, and the reason being is because we realize that this is a challenge for most of the small businesses. And in some cases, it isn't done purposely. It's just simply some inherent fear that they have had maybe in the past in school, math, or whatever. But please, bring in. You need to understand the importance of this exercise in this process. First, to understand the financial aspects of your business, right? To be able to understand from a numbers perspective. Okay, do I know what my margins are, for example? Do I know what my break-even point is? Okay. These are critical issues and then, so I need to keep a certain level of cost of goods sold. What was it the year before? I want to be able to grow, but still maintain the same percentage cost of goods sold. The only way you're going to do that is by looking at your numbers, doing your budgeting and your forecasting of these numbers to be able to say, now I feel comfortable moving forward with some of these strategic decisions that I made for my business. So, you need to remember how important this exercise is for you and the business and the survival of your business, right? So these, again, they're tools that are critical to your company's future. You have your organization, right? You have your processes, you have your company culture. You hear a lot the concept of mission and vision and values of a company. As a banker, I remember very clearly we used to push this mission and vision, the mission, who we are now, and vision where we want to be. And these are all forms of projections and forecasting into the future. So it impacts, the overall structure of your business, your culture, your processes, your people and your organization. And it is, in fact, this budgeting for it's an indispensable management tool, right? You know, because it helps you to do what? I mean, you set financial objectives, and to do that, obviously, as I have been drumming along with this tune about gathering relevant information, making it credible, believable, based on research, then that in itself will allow you to develop an appropriate plan. Why? Because it's a plan that is based on credible information that's been researched. You're not winging it. You're not second guessing. You know, this is not, you know, there's a lot of risk in business, but we're definitely not, you know, we're not out in the casino, right? And so you want to, these decisions can have a very serious impact on the livelihood of your business, your family, and then, you know, implementing that plan. And once you have an implemented plan that is solid, you should always remember to update that plan. And how do you do it? By measurement in your plan. And that's where you will constantly be faced with the issue of budgeting and forecasting. It's very much a part of your plan. It is, as mentioned, an indispensable management tool that you will be using on an ongoing basis. Very, very, very critical, very, very important. So I mean, I just provided, in fact, I believe that all of you can access this information. I mean, this is just some ideas on cash budget. And I guess when you some of you, you're just creating a budget. It's as simple as you're projecting your sales, taking into account your expenses, you know, salaries, rent, advertising, etc., to be able to project into the future based on credible numbers, right? Okay, so when we say what is financial forecasting, I think it's safe to say now that you understand, hopefully, that it's part of what? A planning process. And earlier in the presentation, we talked about the business plan and how important the financial projections in a business, particularly in a startup, but in general for all businesses. And for those that are existing, that already have a track record, you know, the exercise should be a bit easier, but still it's always a challenge because there are a lot of factors that can impede or can assist in reaching your goals. But I mean, if you do the exercise, you take the time and you take into consideration all these different key variables, obviously your level of success could be enhanced tremendously, right? You know, you're talking always, as I mentioned there, extends over a time horizon, and these projections, you're basing them on economic assumptions. Obviously, if you're in a business that there are certain aspects of the business are impacted by interest rate, inflation rate, et cetera, obviously these need to be taken into account. And then, you know, this forecasting of sales into the future is something that, you know, everyone's going to be interested in, not just yourselves, but also those individuals, whether it be investors or lenders, want to make sure that you're providing. And again, you know, being able to understand, and I know you had an earlier presentation regarding financial statements. I mean, please, you need to embrace your numbers, to have a clear understanding of your balance sheet and income statement. And what are the asset requirements? Well, I mean, in a business, obviously, if you want to grow, how are you going to grow? And you're going to grow by what? If you're selling a product, you need to buy more inventory. Okay, how am I going to buy this inventory? Do I have sufficient liquidity to finance it myself? Should I go out to a third party? Will my suppliers provide me with some sort of trade credit? When I sell, I'm selling on who am I selling to? Have I done an analysis of the credit worthiness of these individuals? You know, when I do my credit sales, I'm creating a current asset, which is called accounts receivable. And then, you know, I don't get paid immediately with that. So, you know, that's why, you know, I always like to focus on the operating cycle of the business, which is, you know, clearly another presentation that we can talk about in the future. But I mean, understanding how long it takes for you from when you sell to when you get paid, or when you buy your inventory and when you get paid, and when you finance the inventory, and then when you're able to pay back. These are all operational cycle, cash conversion cycle. These activities in the business will determine your level of efficiency, and bankers look at that very much so, and it could make or break their decision to lend you the money. If you are growing, but you made, you know, the projections that you made and the decisions that you made in terms of maybe taking on way too much inventory and selling way too much on credit, and then you're faced with delinquent accounts, et cetera, all that is going to impact you in a negative way. You know, I always tell people, I always say this in every presentation. I'm sure that Jesus and others in the center will always remember that. I always say that you can sell yourself out of business, and simply by what? By simply buying way too much inventory and selling way too much on credit for too long. Your liquidity dries up, and now you have no liquidity. That's why you have some businesses, sometimes they'll say, hey, listen, Ray, I don't understand it. I sold so much this year. I paid my taxes. I reported this net income, but when I look at my bank account, I don't have sufficient liquidity. And I said, well, maybe you have too much money tied up in inventory and or too much on credit. You're selling, yeah, sure, you're selling, but you're selling on very long credit terms, and as a result, you're not getting paid on time. So all these issues become exceptionally critical, and as can well be imagined, it projections and budgeting and projections are a very integral part of the overall process. So, you know, do not discount its value. And here's a little bit of an example of some forecasting, because, you know, you remember you can do forecasting in different areas. In this case, this is a market study. So you can do both financial and a market study, and then you make a determination of what sales pricing you're going to use, etc. So why forecast? All right. Well, the objective of forecast is what? To produce better forecasts, better, and to be able to determine better objective. But, you know, in a broader sense, the objective is to improve your performance as a company, right? More revenue, more profit, increase customer satisfaction. You need to go through the exercise. It isn't just about I bought a product and I sold it. And I mean, there's much more to running a business than selling a product. And I think the quicker that as small business entrepreneurs you come to terms with that, the better it's going to be in terms of outcome for you and the business. So here are some of the key takeaways that I wanted to share with you. And then, you know, something to think about. All right. Okay. Well, I mean, that ends my presentation, Matt and Jesus.
Yeah, and Ray, I'll help you with the questions. I think great job. As usual, it's like you've done this presentation a few times. I think sometimes me and Jesus, we could probably do part of it. We wouldn't be as charming as you.
I think you could. I think you could.
But we do have a couple of questions. I was going to cover some of them that were not in the Q&A, just so we could make sure we get to them. So we did have a question from Claudia, Ray.
Yes.
How quickly do bankers typically look for a return? Is a business loan a good option for a business that will be profitable in year 2 or 3?
Okay, well, it'll depend, Claudia, it'll depend on the appetite of the bank for that particular industry, right? Yeah, because remember, banks are very much driven by how will you be able to repay the loan, right? So there has to be definitely a way to determine when the loan's going to be repaid, because you know, that scenario that you talk about, it sounds more like when you're trying to bring on investors that are much more willing to wait for a return on the money. I think if you approach a bank and with an idea that is not going to provide, because remember, there's a big difference whether or not the business provides sufficient cash flow to service the debt, and it could still not be, you know, providing such a good profit in comparison to a company that, like you mentioned, that it's, or it seems like you're mentioning, that the bank would take a gamble with you on an idea that will not give fruit till 3 years down the road. So, you know, that one, I think when you, in that particular scenario, I think I'm more inclined to recommend you to investors that may be willing to wait and take the risk because they're looking for a greater return. You know, as I mentioned through this presentation, bankers are so regulated, and with them, it's all about risk mitigation and making sure that the debt is serviced. They would have a very difficult time to explain to regulators that, oh, no, this particular borrower isn't going to pay till 3 years down the road, but it just ain't going to work. I hope that addressed.
Yeah. And then Mr. Morgan had a question, just asking, creating a balance sheet is everything you purchase for the business. Is that correct?
Yeah, well, the balance sheet, and again, this is very great. You remember that what does the balance sheet tell you? It tells it depicts your assets, what you own, your liabilities, what you owe, and the difference is the equity, the skin in the game, and the equity in the business, right? So yes, when you put together a balance sheet, you will say, okay, for example, if you started a business, you'll start with cash in the bank. If you have no debt, there's no liabilities, and then your assets and capital equal the same. But as you grow the business, now you may take on credit to buy additional assets, and now you'll have a liability. So that's the way it works. The balance sheet demonstrates to the lenders that, okay, what does the bank own? What does the company own? What they owe, and how much skin in the game they have. For example, in the capital area, those that have been in business a while will have a section that's called retained earnings. That retained earnings is part of the capital account, and it shows an accumulation of hopefully what profits have been in the past. So, so typically the balance sheet also demonstrates the financial strength of a company, whether it's very leveraged or it's well capitalized.
Yeah, and then I'm trying to find that one. Terrence just said, when starting out in business, is it okay to ask for money? And I guess you would kind of give the standard thing, the friends, the family, and then some people say the fools.
There you go. Absolutely.
You
know. Family and fools, right? Yeah, well, yeah, I mean, you know, when you start a business, typically because you do not have a track record, you know, the typical route is to have, as Brian mentioned, friend families, and then they comically use the word fools, people that are willing to take a risk with you to get the business jump started. But I think in that particular space, what's really critically important, and it's something that we do quite well at the center, is to have your business plan. I'll give you, for instance, recently was helping out a business, and this is a young lady that, and I think I mentioned it before. I think, Brian, you may have heard this story before, but it's someone I'm kind of excited about because I think that I will be able to do something for, but it's someone that wants to start a diving business. They have the boat, they have good liquidity, and I said having that business plan will be critical. Could make the great difference between being able to get an SBA funded loan versus having just to finance it through a boat financing company, that type of thing. So you need to have your business plan, that blueprint. So you have to have that blueprint before you ask for money. Let's face it, you know, if you're going to ask me for money, okay, what do you need the money for? A typical question that they're going to ask you, okay, show me what you're going to do with this, and show me for how long will you need this money, and then show me how are you going to repay me? How are you going to repay me? Show me how you. So you need to have your ducks in a row and provide an appropriate business plan, and that's something that is very, very critical. You know, I think at all levels, but I mean, particularly very critical with startup businesses.
Mhm. And then Terrence had a similar question in the Q&A related to identifying angel investors. He keeps hearing about those in the community. I would just say on investments or angel investments, there are a number of groups in Miami. It's just like if you're going to a bank, like Ray said, you're going to want to do your homework because different angel groups, they focus on different industries, different businesses, things like that. So you would want to kind of do your homework and not kind of cold call and go in, because some of them focus, obviously, if they're in Miami, they would focus on our area, but angel investors around the country, they have specific geographic areas they look at, specific industries. They're going to look at different types of businesses and the stages and things like that. So there's a lot of resources. If you just search online, you can find them. But like Ray said, you definitely want to do your homework and have, you know, all the information they'd be looking for, like a pitch deck, like business plan information, like all that. Kind of do your homework.
Yeah, I mean, don't think that because they're called angel investors that they're really angels. It's simply that they may have an appetite for a particular industry, and they'll be willing to take a risk, but there's always a price to pay.
Yeah.
And you know, you may find yourself in a situation where an angel investor may be asking more than you had anticipated. So
yeah, they'll want equity in the business. You know, they'll want certain structural changes or certain things. So folks won't just give you the money for nothing. A lot of times they do want some input in the business. And then Rudy had a question. He always thought that budget was somehow related or the same as the total amount of money available for a business to operate, specifically on a startup. Would that be correct?
Well, look, okay, think of it in this way. It's part of financial planning process. What you're doing is you're taking an accounting of what your sales are, your expenses, and where would you like to be based on what you've done in the past, and what will you need moving into the future and be able to, let's say, grow sales by another 30% or 25%. So I mean, it is, you know, it takes into account, yes, everything that you do in terms of your selling, your expenses, and also what you want to do. What if I need to grow in sales by acquiring an additional machinery, then I have to mention that in my budget planning and stuff. So it's a part, it's a very critical strategic process that you need to pay strict attention to, and because it's going to, you know, be either make you or break you. If you have no planning, if you're flying by the seat of your pants, you're not taking into consideration what you will need to do to grow in the future. Obviously, you know, you're programming yourself to fail.
And then the next question was another question from Rudy. What are the main items or financial indicators that bankers look at when evaluating a business? Which one is the most important? And I would mention for Rudy, we very frequently do a presentation that you would love because Ray is the presenter that is focused on how to make your business bankable. So it does get into a lot more detail than Ray can give you in 10 minutes. But I just want to mention, we do have that, and it's also available on our YouTube page because we've done it previously as a webinar, but I'll let Ray kind of answer your questions. What are the main items or financial indicators that bankers look at, and which one's most important?
Yeah, okay. First of all, I always use, and the term is called the 5 C's of credit. It's a platform. They look at character, capacity, collateral, condition, and capital. They want to make sure that if you are running a business, that you have the experience in it, that you have a good credit, the established credit to determine that you're a credible risk. Then they're going to look at your business quantitatively. They're going to say, okay, what do the numbers look like? Does the business generate sufficient cash flow to be able to repay the debt? If you're asking me for a loan of X amount, I want to be able to ascertain whether or not your cash flow will be sufficient to service that debt, okay? The other thing is, in that particular case, what you're asking me for, would I need collateral? So they're going to look at collateral. Is there collateral involved as a secondary source of repayment? And then they'll look at the industry you're in. They may not have an appetite for your particular business, or it may be an industry where it's under a lot of difficulty. For example, when we've gone through this pandemic, and we're all hoping that things improve, one of the industries that took a real big hit, is, I'm sure it's no mystery, was a restaurant and the hospitality industry. They took a real big hit. That has changed a lot. But I mean, there were lenders out there that wouldn't even take a plunge. They just simply would not do it. And then finally, they always want to know that you have some skin in the game. If you're too leveraged, then obviously it's so much easier for you to walk away from the debt. So they're going to look at all these different factors. And like Brian mentioned, they have a very good presentation on how to be bankable. And I would welcome you to look that up. Okay. Yeah.
And then she was asking, when was the next time we're going to have it? I know that the upcoming one is with Alpha and Omega Church. It's in Spanish. So I was going to post the link to our YouTube page. I'll put that in the chat as well. And I think there's 2 questions in the, pasted. Okay. So then Nancy's question is, I may be getting ahead of the information, but I have difficulty finding the financial information to know how to forecast my business's growth. I would like to expand my business, and I have ideas, and I know there are other businesses out there similar to what I would like to do, but how do I find the actual numbers for these comparables to be able to use to help me forecast? So she's talking about like benchmarking.
Yeah, well, the benchmarking, you got the RMA, Robert Morris and Associates, that will talk about the industry that your business is in, and they will provide you what are the typical acceptable ratios for different categories, and whether those ratios apply to high performers or mediocre performers or underperformers, because that's what banks will do. They will look at the benchmarking on a particular business, and if your business is considered based on those benchmarks underperforming, obviously, again, it's all about risk mitigation with bankers. So they'll look at your business as a riskier proposition, But I mean, what can you do? What's in your control is, to make this assessment of your business from a financial perspective, to understand better what your margins are, what are some measures that you can take to become more profitable. And then that way, that will allow some doors to be open in the future for you with lenders, because now they see that your trend is a more positive one, that that they're with some assistance in capital access, you can take the business to the next level. But yeah, Okay, I hope that answered the question.
Okay, and then we also have one question from Charette. In general, how long can a longstanding business facing financial difficulty hope to get financial help from banks or investors?
Okay, all right, that's a good question. And again, remember, we talked about appetite, but the issue is that a business, if a business is having financial difficulties, it obviously, again, the risk mitigation aspect of this is always the challenge. So I think it would depend on just how severe the situation is. Remember, banks are not in the business to bail you out unless you're on their books already. If you're on their books already and you owe the money, obviously, they're going to try to accommodate you the best way that they can to be able to assist you to make the loan a performing loan as opposed to a non-performing loan. But I mean, banks, let's say if you approach a bank and you're having, financial difficulties, it's difficult unless you can demonstrate, some measures that you're going to take. I don't know if you're probably not familiar, but there's a lot of banks use a lot of loan agreements, and these loan agreements create the tripwires and bells and whistles, as I call, to be able to make sure that they can be on top of any changes in the business, right? So they'll usually have you report your financial performance for the quarter. They will restrict you from bonuses or dividend payout during the life of the loan. Again, these are covenants, as they're called, that are typically in a loan agreement, but that's when you're already a client of the bank. If you're having, let's say, serious financial difficulties and you want to go to a bank for them to bail you out, it's going to be challenging if you can't prove that your debt service coverage ratio will be there. I mean, I'm not going to sugarcoat it. I'm going to tell you the way it is. I mean, it's just, unless in that particular case, it's more a scenario of trying to either bring in an investor that will help you with some of the liquidity, or perhaps your problem may be that you have, let's say, too much of your debt right now is short term, and as a result, your match funding of that debt is incorrect, because short-term debt is much more expensive than long-term debt. For example, there have been scenarios where we've helped clients where they were having some difficulty because they had a lot of short-term debt, but they didn't realize that they had assets that had great value. And what we did in those scenarios is we refinanced the long-term debt, where they were able to cash out on a fixed asset, be able to extinguish current debt, term it out a longer period, and automatically lowered the monthly payment. And as a result of that, automatically, it just changed the whole profile of the company. Yes, the company still had debt, but now they had termed out that debt, and now they had sufficient cash flow to service the debt and even take on additional debt. So, I mean, these are some measures. So it's almost like it's like a patient, right? So, I mean, that's why, and this is some of the stuff that we also do at the center, right? Some of us engage in that and like to do that. It's making an assessment of your financial situation, and then based on that assessment, making some recommendations of actions to be taken, right? And I know that we've done that in the past with some success, and it's just the way the cookie crumbles, right?
Okay. And then I know we have another question from Charette. I'm just going to email her to email us, because it looks like she might need a little more details or some more information, Ray. So we might get her connected to you. And then I was just going to thank the chamber. I don't know if Matthew had any closing remarks on behalf of the chamber. We do have another webinar coming up on September 23rd on managing your cash flow. It's one of Ray's favorite presentations, because if you know how many businesses we've seen that come in kind of last minute dire straits and because they weren't managing the cash flow cycle. And that's kind of one of the big business killers for them. So I know that's something I love when I see like 90 people there. I love it because people are trying to be proactive on it. So, but Matthew, did you have anything else? And thanks to Ray for this great presentation, as usual. And then Matthew, just anything to close out on behalf of the chamber?
Yes, definitely. Thank you, Brian, and much respect to SBD Center for hosting this webinar with Miami-Dade Chamber of Commerce and all of our sponsors and partners. Ray, that was an excellent presentation. Thank you so much for taking the time to go into those details of budgeting and cash flow, and then also giving substantive examples that business owners can use on why it's important to understand this and how it works, and then being clear, number one, about getting into debt and using debt and leveraging those funds. So those are very important things. And if am I able to share my screen really quickly?
Yeah, Ray, stop sharing your screen so you
Okay.
can share.
All right. So for those that need a little more insight and understanding, may need some one-on-one assistance and helping to put into practice what Ray has laid out, you can always go to the Miami-Dade Chamber of Commerce technical assistance page and schedule a one-on-one with technical assistance. So we will really walk you through business planning, getting that back office together and those things. We are very much engaged in making sure people not only get one-on-one technical assistance, but they are networking. They have opportunities. If you are interested in perfecting your pitch, networking with other professionals, we have a session today. We started these back up last month to do in-person meetings. We do once a month. So you can come out. This won't be in Fort Lauderdale at Circle House Coffee. You can come out, get some relationships and really engage with other business owners today. And if you're still conscientious about COVID, every Tuesday at 4 o'clock, we have a small business meetup where business owners come on. We have our partners, SBDC, Miami-Dade County, Career Source, Beacon Council, quite a few come out. She'll provide the latest resources, information. And you can always go to Miami-Dade Chamber of Commerce, go to our upcoming events and sign up for our small business meetup every Tuesday at 4 o'clock. And all you got to do is come on Zoom. It's free and open to the public. We do have a few workshops coming up. Before our next workshop with the SBDC Center, we will have one from our IT committee about why every business needs to embrace the cloud, so that you can really leverage this technology to get access to your documents and really helping you through what that looks like at business. Some of us are not as tech savvy, so we have our technical team coming in to really help you understand the cloud and how to move. Also in partnership with Miami-Dade County, we have what you need to do to become certified as a business in Miami-Dade County. Literally billions of dollars is allocated by the county, and millions, hundreds of millions of dollars are dedicated to small businesses in Miami-Dade County. And the Small Business Division Director, Gary Hartsfield, will be coming in and talk to you in detail how you can get certified and get your business up and running. Also, our Women's Business Council has been very good at, over the past few months, talking about how to share knowledge between generations. These are millionaires that are literally taking the time to share how they made their first million, money mistakes they've made, and moves in which they had. So please join us. The next one will be October 7th. So that's after our September, I think it's 23rd.
23rd, yep, September
23rd. Financial webinar series. And if you always want to join us for a round of golf, we'll have our annual golf classic coming up in October. So feel free to join us. We want to thank you for being here with us and partnering the SBDC Center for doing this. We're here for you as a chamber. And what leverages us is that we have a network of business owners that have been in situations just like you, that are starting businesses, that are in their growth phase, and some legacy business owners that we leverage to help out and really give guidance and assistance to up and coming business owners. So feel free to join us. If you have any questions, just reach out to us at the chamber, and we look forward to working for you. So thank you, Ray, Brian, Jesus, and the whole FIU SBDC Center for really bringing us together and creating this, and for everyone that's come here today and ask those amazing questions. Thank you very
Yeah,
much.
and thanks for giving us the update on all the events. You guys have a lot of stuff. I know it's tough to keep track of all the good events coming up. So just thanks to the chamber. It's always great to partner with them, and thanks to you, Ray. And we will make the videos available. So the chamber is also going to have the video available on their end. We'll have it available on our YouTube page as well. So if you missed something or you want to hear more of Ray, kind of diving into it, you can look at that on your own time, maybe with a coffee or with your lunch. And then Ray, I know you got to run because you got another thing coming up at noon. So you're double booked today.
Well, yeah, he put me to work today.
So just thanks to everybody. Have a great
Bye. Take care, guys. All the
Thank
best.
you, everyone.
Bye-bye.